Investors, hello! This is AI Crypto Insights channel, a few minutes of AI-powered insight into the market. Just a reminder, this is for educational reference only, not investment advice. Today, we're digging into a really fascinating thesis from Arthur Hayes, as reported by TradingView News.
So, what's the headline number that has everyone buzzing? $200,000. For one Bitcoin? I mean, that's a huge prediction. And the really wild part is how he thinks we get there. And let me tell you, it all starts in a place you'd probably never expect. So, here's the core idea from BitMEX co-founder Arthur Hayes. And it's actually pretty straightforward. If the big central banks get back to printing money, Bitcoin's price is going to go way up. He's laid out this very specific scenario he thinks could unleash a brand new wave of liquidity. And that's what could send Bitcoin rocketing towards that $200,000 target by early 2026.
All right, so what's the big catalyst here? What's that first domino that has to fall for this whole theory to work? Well, it all boils down to Japan and its current currency situation.
So the whole theory really kicks off with Japan. They might be about to step in to prop up their currency, the yen. And we just saw the yen jump, but that's not the biggest clue. The real signal? Reports that the New York Fed is calling around asking about the yen market. Now, if you know how these things work, that's a huge tell. It often means some kind of coordinated action is on the table. Okay, so how on earth does something happening with the Japanese yen translate into rocket fuel for crypto? I know, it sounds disconnected, right? But the link is actually super powerful, and it comes down to one thing: the creation of new US dollars.
All right, check out this chain reaction. It's all about liquidity, which, is just a fancy word for new cash getting pumped into the financial system. So, Step 1, Japan decides to strengthen the yen. Step 2, to help them out, the US Fed steps in and provides dollar liquidity. Now here's the magic trick. Step 3, the Fed literally prints new dollars to do this, which makes its own balance sheet bigger. And what happens to all that new money? Step 4, it floods into global markets looking for a home. And that brings us to Step 5. Historically, where does a lot of that cash end up? You guessed it, in hard assets like Bitcoin.
And here's the best part. This isn't just some abstract theory. Hayes actually points to a specific thing we can all watch, a data point that lets us see if this is happening for real. It's like having a little dashboard to see if the money printer is being turned on.
So what you're going to want to do is keep an eye on the Fed's weekly H4.1 release. Just think of it like the Fed's weekly bank statement for the whole world to see. And you don't have to read the whole thing, just zoom in on one specific line item: foreign currency denominated assets. If the Fed is printing dollars to buy up yen, this is exactly where the proof will be. And right now, that line item is sitting at about $19.1 billion. So we have a perfect crystal clear baseline. If we start to see that number tick up in the next few weeks, well, that could be the big signal that Hayes' theory is officially in play.
So let's talk about the impact. If this wave of liquidity actually happens, what could it really mean for Bitcoin's price?
Okay, so if this all goes down, Hayes is, he's incredibly bullish. His main target, $200,000 by early 2026. But get this, he even throws out a more aggressive target, a potential run to $500,000 if these global money flows really accelerate. It all comes back to that one core driver: central bank liquidity. Okay, so that's the big, exciting macro theory. But we have to bring it back down to earth and look at what the chart is actually telling us today. Because let's be real, so far, the price hasn't really reacted to any of this speculation.
And this is where you see that classic split, right? The theory versus the reality. On one side, you've got this super powerful bull case, all driven by this potential flood of macro liquidity. And on the other side, the chart itself, which shows Bitcoin just stuck. It's chopping sideways in what a lot of traders would just call a no trading zone.
And if we zoom in, you can see it plain as day. Bitcoin is basically trapped in this tight little range right around 89,500. It's getting squeezed between some pretty key support down near 86.5 and some major resistance up at 91,000. The market is just waiting for some kind of catalyst to break it out one way or the other.
So these are the levels you gotta watch. For the bulls, we absolutely need to see a convincing break above that $91,000 mark. That's what opens the door to higher targets, like 98K. On the flip side, for the bears, if we lose support in that zone between 83 and 89,000, things could get a little dicey. That right there is the battleground.
So the AI analyst's verdict: Arthur Hayes has laid out a really compelling data-driven thesis here. A yen intervention could absolutely be the catalyst for a major Bitcoin rally. But the current charts are telling us to be patient. So definitely keep an eye on that H4.1 report. What do you think? Share your thoughts in the comments. See you next episode.